can I be free from these issues that have destroyed my life? Well, my friend, I have the answer. Bible Way Hibner Memorial Church of God in Christ presents Chain Breakers, this and every Sunday at 9 a.m. here on WHYL.
From the L.B. Smith Ford Lincoln Studios, Oldies 102.9 is WHYL Carlisle.
Welcome to the Real Estate Radio Guys, your weekly source for all things real estate. We're your hosts, real estate broker John Rainville and your mortgage expert Kingsley Harmer discuss everything from mortgage rates to home staging for foreclosures and everything in between that affect the daily real estate market. Real people, real questions, real answers. Today's show is brought to you by www.pagoloan.com, your source for new mortgage loans. NMLS number 1018. EnviroQuest, trusted for home inspections and radon mitigation in Central PA for over 25 years. And brokersrealty.com, the easiest way to search for real estate in your hometown. Now, on to the show.
Good morning. It's the Real Estate Radio Guys. I'm John Rainville from brokersrealty.com, Pennsylvania, New York, Maryland real estate broker. Serving 11 offices here in PA, virtually in New York and Maryland. And today I've got a guest host. My guest host today is?
Jason Hamilton, Edge Home Finance.
So Jason's sitting in for Kingsley. Kingsley's, I don't know, I think he's drinking wine in New Hope. And it's early. It's only like 8 o'clock, man.
I got my V8 juice.
You got V8. No. Trust me. If he's off, he's drinking. Kingsley's, might be listening, so we can't talk too much about him. Yeah. But today we've got an exciting show. Jason is obviously in the mortgage business, in the industry for a while. We'll talk about his experience in a minute. But the crux of our show today is going to be talking about commercial mortgages. Now, Jason also does residential mortgages, but the world of commercial mortgages is a whole new world. It's totally different, and we want to discuss that. Of course, we'll have John Staz on later in the show. John's going to be talking about one of his favorite topics today, which, as most of you know by now, is radon. And we're going to be talking about that and also how that fits in with commercial buildings and what they do there, because radon's still a hot issue, and I think last month was Radon, month here in Pennsylvania. So, Jason, tell our listeners a little bit about yourself, what your experience is, what you do. Besides getting accused of being me by Cubby.
And eating a lot, wearing 3X shirts.
I'm doing 2X.
Well, good for you. I'll buy 3X.
I got some 3Xs I can give you.
I need room to grow. Well, John, I got in the finance world business back in the late 80s. I was a financial planner for many years and learned and understood how collateralized mortgage obligations work and the whole financial picture, and decided in 1988 to open my own brokerage.
Oh, nice.
And so I've been doing this for a long time. Obviously, the way we get apps has changed. We don't take them on napkins anymore. We use apps and do things, with online tools. But the basics of the mortgage arena's not really changed.
But you've done all sorts of different types of financing over the years. You've got a long. You also have business experience too. I mean, you've been in business for yourself many different times in different businesses. And don't you also have some accounting experience?
Yeah, I do have some accounting experience too. So that brings a little bit of a strength to me when I'm looking at a commercial deal, because I understand the finances of the different businesses that people are looking at, whether it's multi-family project or a car lot, a gas station, a bar, a laundromat, whatever it might be. It helps me, I think, put the whole deal together more seamlessly.
Now, basically, you do SBA loans or not? No, is that?
I do. I do have a few lenders. So we do the SBA. We do the veteran SBA loan that's out there now.
Oh, so, nice. I didn't realize
the
that.
benefit of us is we're a broker, John. So what I tell people is we don't give you the take it or leave it loan. When you go to your local bank or your regional bank you deal with, they got a set of guidelines they got to follow, and they basically say, look, here's your loan, take it or leave it. And that's not what we do. We've got 40, 50, 60 different lenders that do all kinds of stuff. Not one loan fits and one size fits all kind of box.
So for our listeners, we've done a couple shows on insurance, and that's sort of the same it's like you're not just a nationwide insurance agent. You can run them through 100 and some different companies until you may find a match for them or a better product for them.
Right, exactly. And that's what we want to do. We want to get our customers the best rates, the lowest fees, and the loan that fits their particular project.
What are some of the things that are different, or can you tell our listeners how a commercial loan, maybe differs, and what sort of things you need to apply for a commercial loan?
Yeah, I think the biggest difference between residential and commercial is personal credit. In a residential loan, we look at the 3 C's. We look at credit, capacity, and collateral. If the house appraises, you have the ability to pay and your credit's good, we have no problem getting you a loan. But on the commercial side, the banks don't really look at your personal credit as much. It's not as big a factor. They're looking at things like debt service coverage ratio. So that's really a crazy accounting term, but it lets the bank know how well does the property perform being managed the way it's currently managed. What kind of coverage ratio does the debt have against the cost of the loan?
So give me an example. Are we talking about let's say I have a pizza shop. Mm-hmm. All right. So are we talking about the pizza shop? Does the numbers, the income justify the purchase price?
Yeah, not really necessarily. In the commercial world, we're looking at that pizza shop if it's just a standalone location.
Yeah, standalone in its own
It
real
could be a
estate.
pizza shop. It could be a bread store. It could be a bakery. It's that building historically. How has that building performed? So if the pizza shop's always paid its rent for 10 years and there's enough debt service to cover all of the costs, that's going to be a commercial loan to look at.
Okay, so what if I'm buying the pizza shop?
Okay.
I'm buying the pizza shop and the real estate. So what do you look at then? Are you just looking at what the rent was from that building?
Not as far as the real estate goes, yes. But then when we look at adding the business in on the commercial loan, then we have to look at the financials of the business. And have they been paying taxes on all their proper income and
We're
that
talking
kind of
a
stuff?
pizza shop, man.
Well, I'm with you, but the reality is you can't have it both ways. You can't make $100,000 a year in cash and not report it. It's not going to look good on paper. So I suggest all businesses, let's get with a good accountant and make sure that your numbers look the way they need to look if you're planning to sell, because we do a business valuation based on year's income and expenses.
Are they able to actually finance in a portion of the cost of the business acquisition, or is it when you do a commercial mortgage, is it just on the real estate?
If we're talking just commercial mortgage, it's just on the real estate. We're not including the business, but there are a lot of programs out there like SBA where we actually can finance assets of the business, and we would look at things like the fixtures of that pizza shop, the equipment. They would have real hard costs, hard values. And we would look at things that way. It's not just about the income.
So some of the things that if I were a business owner and I'm owning that pizza shop that I would need to probably provide for a potential buyer is probably things like an equipment list, probably several years' taxes.
I would say 3 years' taxes. We're going to look at the last 3 years, and those taxes are going to have your equipment lists on them because you're probably going to be depreciating those items. So we're going to get a pretty rough idea on what that stuff's really worth in a transaction.
So things like that, but then I guess their inventory sometimes varies, like in a purchase, whether someone's going to have an extra cost, and you're going to have to pay me $22,000 extra for my inventory as of the day of closing or something.
Yeah,
but nobody, even on an SBA, they don't finance in the inventory. Somebody's going to have a little bit of cash into the game.
Yeah, you're not going to want. It's not like buying a home with 0 down and seller paying all your closing costs. You better have some assets put away to make that deal happen.
So let's talk about that on a typical commercial mortgage. We're just talking. I'm just buying the pizza shop building. I'm going to rent it to Big Dog back there behind the board, and he's going to run a pizza shop. And I'm getting $1,500 a month rent, yada, yada, yada. How much on a commercial loan typically would I have to put down? Let's say I've got average credit. I'm in the 680 to 700 range.
You're going to need 20% down in most cases. I can go up to about 80% on a commercial deal.
Okay, so you have to have some skin in the game. Mm-hmm. Okay.
And in a commercial world, you could have 10% of your own cash and the seller's holding a second for 10. It can get a little bit more creative than we can in the residential side. The bank wants to be at 80%, but they're not so concerned about the CLTV as they are in a residential situation.
So there's actually the potential then, if an owner is willing to carry 10 or 15% and still get a return on their money.
And it's very common in the commercial world, because people that own commercial buildings and are selling and financing them, they understand the game. They know they may have to either help the buyer out, or the buyer's going to have some cash.
Now, I know you were talking about, how you broker loans, and I know you have a whole big book of different types of businesses that you're able to finance. And I guess now, are there certain actual lenders then that specialize, like let's say in funeral homes or something like that?
Yeah, like churches, funeral homes. I was looking in the book this morning, because this is the new edition that came out, and I was just looking at a multifamily construction that was $11.5 million just closed. So there's deals closing all over the country. I mean, we're in the billions of dollars of transactions.
Okay, so let's back up to what you just said. You said that was multifamily new construction?
Yes. Mm-hmm.
And how would something like that get financed?
There's just lenders out there that specialize in doing that. They're providing fix and flick rehabs. If you're going in and buying a hotel that needs a full rehab, there's banks that specialize in funding that kind of stuff. And that's why I say, one size doesn't fit all. We've got banks that do, like I said, from church funding. We can use mezzanine funding, insurance money. There's a lot of different money out there. And, for those of you that maybe you don't have a 680 credit score, maybe your personal credit's in the toilet, but you got a property that really makes sense, we've got private money out there, hard money that's available to, fund those deals. As long as we have equity in a commercial deal and the deal makes sense, we can find a way to get it done.
You said mezzanine financing. What is that?
It's a conglomerate of insurance companies that want to invest in commercial deals and provide money, and they get a decent return. It's certainly better than investing in the Treasury right now at 3%.
Wow. On a commercial mortgage, I'm more familiar with a lot of the residential mortgages. Those tend to be backed by the government, Fannie Mae, Freddie Mac, USDA, VA, FHA. Does the government or anybody back any of these commercial mortgages?
It's kind of funny, John, you asked that, because it's Fannie, it's Freddie, it's all the stuff that you're familiar with in a residential side. They have a big commercial division as well. Now, when we do those hard money loans, or we use insurance or mezzanine funding, it's not backed by the government. It falls under its own set of rules and guidelines.
Now, do sometimes on some of these big deals, do sometimes maybe like two lenders get involved, or?
Well, if you go to your local bank and you're doing let's say you're building a hotel and it's $20 million, your local banks are not going to be able to take that down by themselves. They're going to have to get a conglomerate of investors together. What I do as a broker is I find a lender that does all that hard work for us. So they're just doing the end loan. They're going to give us the money on the whole project, and they're going to worry about getting different people to participate in it.
So we're going to go to a break here, and when we come back, I'd like to talk a little bit about what the process is when they're just thinking about, hey, I think I'm going to buy this business, I want to get a commercial loan. When we come back, let's talk about how do they get pre-approved or whatever with someone like you.
Absolutely.
The Real Estate Radio Guys with John Rainville and Kingsley Harmer. We'll be right back.
Searching for a home online morning, noon, and night, looking at website after website, clicking contact me and nobody does? Missed homes that were sold before you knew they were for sale? The better choice is searchhomesinpa.com. Search if you want, or they'll do it for you. Contact by phone, email, or text to adjust your search or to tour a property. Start online. They'll call you back at searchhomesinpa.com or call toll-free 855-919-HOME and they'll do it for you. Searchhomesinpa.com, 855-919-4663.
Buying a home? Your good credit could equal 0 down. Schedule for a free consultation today at kingsley.today and get started on the path to home ownership. NMLS number 1018. Good credit should equal better mortgage rates. Schedule for a free rate quote at kingsley.today and get your lower rate. NMLS number 1810.
Listen for the Real Estate Radio Guys with everything you need to know about buying and selling real estate. Saturday mornings from 8 till 9 on Oldies 102.9 WHYL.
Everyone wants to buy, sell, or invest in real estate, if only they knew the best way to do it. Hi, I'm John Rainville.
And I'm Kingsley Harmer. And we're the Real Estate Radio Guys.
We bring over 40 years' experience to talk about all things real estate.
Weekly, we'll discuss the latest trends, hot topics, along with tips and techniques that could save you thousands and eliminate headaches.
So tune in to the Real Estate Radio Guys, Saturdays at 8 a.m. here on WHYL 102.9. Real topics, real answers for real people.
Buying or selling a home? For professional home inspection, call EnviroQuest of Harrisburg. Their certified home inspectors will conduct a thorough inspection and provide a detailed report with many pictures. They'll explain the findings. Do you have elevated radon levels in your house? Call EnviroQuest. They have fixed over 10,000 homes over the last 25 years. For a professional home inspection or radon mitigation, call EnviroQuest at 233-6144, 233-6144, or visit EnviroQuest online at evqharrisburg.com. That's evqharrisburg.com.
Back to the show, the Real Estate Radio Guys with John Rainville and Kingsley Harmer.
Well, good morning. It's John Rainville. I'm back with my guest co-host,
Jason Hamilton from Edge Home Finance.
And, we're discussing commercial mortgages. And so, Jason, how does somebody, let's say somebody's out there listening and they maybe they're buying a commercial property now. What are some of the first steps?
Well, it's just like a residential loan. You got to get pre-qualified. And for me to start that process, I tell everybody go to appwithjason.com or call me at the office, 717-761-3310. The first step is to, get an application. They can start by filling that out online or giving it to me over the phone. And then I give them a call and we'll go through the details of what they're looking to buy, and I'll let them know what I need from them to, get the ball rolling.
Standard sort of things. Then after that, though, after they would be in the contract, they would get an appraisal on the property. Anything different that might be required?
Just depends on the property. Multifamily property might want rent schedules, might want, like I said, tax returns. But every project's different. That's why I got to talk to them first and figure out what the lender will want on those particular deal.
You even have access to hard money?
Yes, sir.
Can you explain to our listeners what hard money is?
I tell people it's one step below the mafia on the street corner in New York.
Back to the pizza shop?
Yeah. It's not cheap, but they'll lend money fast, normally close in a week or two. So for a business that, maybe has a ton of equity in their property, they need money really fast for a business transaction or a deal or a property they don't want to lose. We have the ability to get them that money quickly and pretty painlessly, to be honest.
So I'm sort of looking through the book that you brought. So,
that's the commercial Bible, John.
Okay. So things that you have access to funding for. I'm seeing a luxury fix and flip single family home.
Yep.
Spec homes.
Yep.
You have spec homes for like a builder.
Yes, sir.
So the builder would have to qualify and the project would have to qualify.
Yes, sir.
Okay. Hotels, multifamily, daycare. It's just incredible. Apartments, a subdivision, offices. I mean, mixed use. Can you explain to our listeners a little bit about what a mixed use?
Mixed use is like the condo, the Lux they did downtown Harrisburg, where they put commercial businesses on the first floor and have residential apartments on the second, third, fourth, I think up to the 8th floor.
Okay.
So it's a mixed use property. It's not just commercial. It's not just residential. It's mixed.
So I was out to a very cool commercial property here locally. It's in the Gettysburg area. It's General's Mountain. It's about a $21 million property. Okay.
Will they take a check?
Check or cash.
Oh, wow.
Check or cash. Let me just tell you a little bit about the property and see what you think on how we might, if there's a possibility, way to how it would be financed.
Mm-hmm.
So we have almost a square mile of ground. We have 635 acres of ground. That's a lot of ground.
Yes, sir.
Okay. So we have 131 acres of that is in a special variance where they let a new lodge be built. This lodge is about 75,000 square feet.
Small.
Yeah, 75,000 square feet. It's got 3 banquet rooms, 18 guest rooms, a kitchen, that's set up to run like 1,000 meals out of it. That's been designed by a chef. It's actually made out of concrete logs from Evercrete out of Missoula. They actually came in and put the building up. Absolutely phenomenal. You would not believe that they're logs.
Wow.
Each one is different. They actually then you can they stain the concrete in any color you want to make it look like whatever, and they actually have an artist come in on each and every log and do hand detailing. Can you imagine that on a 75,000 square foot building? Some guy went around on each one. But
wow, awesome.
Really,
no termite damage there, though.
No termite damage. Very energy efficient. Cool building. Probably needs about $2.5 million to finish it out. Okay.
Mm-hmm.
Also on the property, so I think this might fall into that mixed use. We've got about a 6-bedroom, 6,000 square foot stone, almost like a mansion type home. We also have on there a brick ranch home. We also have on there a Quonset hut. We also have a wood shop. We also have, barn and stables on the property, just to give you a little bit of a feel for it. So not your run of the mill, easy peasy, down and easy property, And now they're looking to sell something like that. So obviously someone's going to have skin in the game.
Mm-hmm.
And would that be like a mixed-use property?
Definitely. If you had somebody that had a few $1 million and maybe the seller held a small second, I think you could certainly find a financier to put that deal together.
Okay, so even though we've got some residual construction finish out to be done,
yeah, it would be a mixed-use renovation type loan. We want to finish this project, and then what we would look at is the future income potential of the whole property when it's done. Sounds like, John, if you bought it, I could live in one of the guest houses and you could rent out the other spaces and feed people.
Listen, let me tell you what, the smallest guest house, I could live there.
Well, I just told you I wanted that one.
No.
So you have to pay for a different one.
You can have the 3-bedroom one down towards the entrance.
Okay.
Yeah. I mean, just phenomenal. These people have been phenomenal stewards of the property. Everything they did was very careful, very deliberate, and just the finished work. Everything's just stunning. I mean, I can't say enough about the property. So, but it's just interesting. Then we ended up, you and I, having this show today on the commercial loan. So I wanted to have an opportunity to talk a little bit about it.
Certainly would love to finance it. If anybody out there has a few $1 million and they want to step in on a great project, I'm sure you'd be happy to show it to them.
Oh, absolutely. I mean, it has a lot of options. Could be, you could have a sports camp there. You've got so much ground, tons of trails, very private, very secluded. I mean, to find almost a square mile in Pennsylvania that you can buy.
Maybe we could have the Royals, after they get married, come there and stay and visit it.
They would love it. They would love it.
Yeah, very secluded and private.
They would love it. So construction loans. I mean, even commercial construction loans you have?
Yeah, I mean, listen, these buildings get built and somebody's got to finance them. It's just a business that kind of was standoffish for many years and controlled by the regional banks, and everybody's realizing that there's, a lot of good commercial deals out there, and people are paying actually higher interest rates than we're paying on residential loans sometimes.
I mean, I'm looking through the book of things that you have access to, and I guess last month they closed on an amusement park.
Yeah.
Now that had to be a different one.
Yeah. I mean, again, there's no limit. When I tell you there's no limit, if you're out there and you have a property and you want to finance it, we'll find a way to get it done. That's the bottom line.
I mean, some of these. I mean, I'm looking at some of them. Some of them are deals that they've done, or normal things like a dentist office.
Yeah.
Amusement park. That's a little bit different. It's just it's stunning. So I mean, if they have a question, whether even it's anything from construction, working capital. I saw you guys even have stuff for if somebody wants to flip like a commercial project.
Yeah.
And subdivisions.
Yeah.
So, but about the only thing it seems that you don't have here in your commercial bag of tricks is homes, regular homes. But then I see that's what I was going to say. But then I see luxury fix and flips.
Yeah, that's for something that doesn't fit in our normal guidelines. That was probably a $2 or $3 billion luxury home that somebody wanted to flip, and they used a commercial avenue to get the money because it was cheaper than getting it on the other slot on the residential side.
Wow, I mean that really.
I just did a deal here in Mechanicsburg, John. It was 104 acres of raw land, and the buyer came and he had 20% down. He was putting some equity in the deal, and it was a really tough deal to get done. Everybody locally wanted to do it as a portfolio loan, and we were actually able to close very quickly in 2 weeks and got it done for him, about a $500,000 deal. So
wow, on raw ground.
Yeah, raw ground. It was farmland. Had a couple outbuildings, no house, and we closed on it, and he's going to build a house there. We're going to do a construction loan for him and eventually an end loan.
And it's just interesting that you should bring that up because yesterday also while I was down there in the Gettysburg area, we looked at a 100-acre parcel with no house. So that's something you would actually be able to fund if one of the adjoining farms, for example, maybe one of the Amish farmers or somebody there would add it into their grant.
I never did a loan for an Amish person, but I would certainly try. I'd love to. But, yeah, we could finance that raw ground.
Is there anything special that you had to do on that ground loan?
No, we ordered an appraisal through one of our appraisal management companies. It was normal price, $650, I think, and got the appraisal back in 4 days. Like I said, we closed it in 2 weeks.
That's outstanding. I mean, that's really outstanding. Can we talk a little bit about SBA loans? Or they're a little bit different. And what they allow you to do as a lender? Yeah.
As a broker, when we do SBA, we do reach out to a couple lenders we work with specifically on SBA. Because, again, there's so much to know that I don't know. I'm not an expert in every facet of commercial lending. So when I don't know, we're going to bring in the experts who do know and have them help you funnel through the weeds.
From my experience in selling some businesses with properties, we sold a butcher shop a few years ago up off of Wirtsville Road, and it had a house, and we were able to do that with the SBA loan. Mm-hmm. But we actually married him up also into what I call the team to get it to the table, which is what the realtor and the owner, everybody should work together to try and get everybody to the table, get the keys passed off.
They say it takes an army to raise a family, and sometimes I feel in the loan business it's the same way. I mean, it takes a lot of people to make this stuff happen. You know as well as I do, with the title attorneys, appraisers, real estate people, mortgage people, and in many cases we get accountants and all kinds of people involved in transactions to make them happen.
Especially so that they understand exactly what's going on. And actually that can set them up for better success because they have everything in place. The one that I can use as an example from a few years ago up off of Wirtsville Road, we actually had them with a local attorney, Tony Fasci, who does a lot of business brokerage and hotel deals, but we actually sat down and helped them write up a full, market plan, business plan of exactly how they were going to add this second butcher shop place in.
It's important. It makes people look at not only, do the brush strokes look like a great painting, but at the end of the day, can we make this look exactly the way we want it to look, and is it going to be as easy as we think it is? And like you said, it adds a lot of clarity. If you do that business plan and you say, hey, I can do this because I can make an extra, whatever, 50, 60 grand a year, it certainly, makes a lot more sense, and everybody understands what they're doing. And I tell everybody, man, if you have a good plan and you follow the plan, things normally come to fruition and things happen, and it's quick and easy.
Absolutely. Multifamily. What? Tell our listeners a little bit. So, right now I have someone. Okay, they're looking to buy multifamilies between East Berlin and Hanover. Former clients of mine, and so what will they need to do for you? And then tell me a little bit about what we need to look for on the multifamily side for them on the numbers.
Well, you got to be able to find the deal, but multifamily is becoming ever popular with the shortage of homes, as you know, that we have out there. Rents are going up. With interest rates on the rise, rents are going to continue to climb, and so what we would do is I'd get an app from them. They'd go to appwithjason.com, get me their information, and then we'll get them a list of things they'll need as they shop. Obviously, they'll want to have some skin in the game, and then depending on the project you find, we'll probably want to look at rent schedules or something to determine, does it make sense or not make sense?
So on a multifamily, let's just say we're looking at a typical. Let's just say maybe it's just 4 units. And I know that doesn't hit into the commercial arena, but just let's just say it's 4 units. So how does the cash flow? Let's say that they've had steady tenants, they've all been there, and I guess this really applies for any multifamily. They've got a good rent history. Do they utilize a portion of the income that the property's generating?
They usually use a vacancy factor, depending on the project. If the tenants are long-term tenants, they might use only a 10% vacancy factor. And I can just tell you, John, if you have somebody looking at multi-family units, I listened to a mentor in the business, Grant Cardone, who buys a lot of 100-unit, 50-unit, 200-unit complexes, and those deals are easier to get done than 4 units, believe it or not.
Really?
Yeah, if you find 10 or 15 or 20-unit complex, it's a lot easier to put that deal together because they normally cash flow. Today it's all about income.
So let me ask you this. So let's just say that somebody has $150,000 cash, okay? So instead of just buying maybe a 4-unit, maybe they should, I know we're just guessing right now, maybe they should leverage, right, and utilize those funds and maybe buy a 20-unit.
Right, because they do have some skin in the game. We would just structure the deal appropriately to fit their situation. Maybe the seller's willing to hold a second for us. And at the end of the day, if you can leverage your $150,000 and turn it into 3 times more income than you could on a 4-unit, why wouldn't you do that?
Because now we're going to be appreciating on the higher number.
Absolutely.
So, we're going to get a much larger return, especially if we're doing it. Maybe we're, in our 40s and we're planning to use that for our retirement. That could be a huge difference. Instead of maybe appreciating off of $150,000, maybe now we're appreciating off of $500,000 or $600,000.
Right, and that's the piece, John, that so many people miss. If real estate this year is only going up 3%, but it's supposed to go up 3% for the next 4 years, it's ginormous how much money somebody can make. It's not just about the monthly cash flow, but it's about the future appreciation and how much money you really can make. And the tax benefits. There's a lot of tax benefits to owning real estate, and that's where I say it takes an army. Get a good accountant, get a great realtor, so that when these projects come around, you can always get them. And, when you have 20 units producing, we'll use 500 a month because the math's easier. But versus 4 units at $500 a month. It's $2,000 versus a lot bigger number, and that income allows you to leverage more properties. Does that make sense, John? Like you don't need the $150,000 cash the second time around because you already have a successful project with a lot of monthly income to help support a future project.
So it counts. The experience counts.
Right. You know how they always say the first million's your hardest million to earn? It's kind of like that in real estate. You got to get a couple of projects under your belt. And if you're going to own 3-4 units, you might as well just own a big project with 20.
That's right. Go big, go home.
Yeah, exactly. Go big or go home.
I get it because we're seeing the appreciation. You're paying, the tenants are paying down your mortgage, so you're getting the double benefit, and it can really
Well, and finding a future buyer, to try to sell a 4 unit, there's a certain investor that's buying that type of project, but when you amass 50, 60, 80 units in your portfolio,
right,
when it's time to cash out, the millions will come, trust me. People will be lined up to buy it.
So I'm just going to stay stuck on this scenario for a minute. So let's just say, what if instead of they didn't have 150 cash, but let's say that their house was completely paid off.
Right.
Good jobs, steady,
I'm not a big proponent of risking your personal residence to put a business deal together.
So you wouldn't have them pull like a HELOC on it?
That I would do. I might pull some cash out of the primary residence and use the money to do the other deal, but I wouldn't do cross-collateralization, which a lot of local regional banks do.
Can you explain that to our listeners?
Yeah. What it is if you get money from your local bank and let's say you own your house free and clear and you're buying a 4-unit apartment building, they might give you the money if you don't have the cash down, but what they're going to do is cross-collateralize, so they're going to put a lien on all the properties that you own. And I never advise people to do that. You want to keep your deals very clean and separate so that you don't risk your personal residence of where you live. You want to keep that lien separate from your business dealings. And listen, you'll want an attorney, you'll want an accountant, but a lot of times it makes sense to do these deals in LLCs, John. There's a lot of tax benefits to doing it that way.
Oh no! You just brought up another thing. We're getting down a lot of rabbit holes today. So all right, so I've got that couple. We're going to initially pull. Now I'm going to change it around. They're going to pull that equity out of their home because their house is paid for.
Right.
And they're going to use that for the initial down payment on the apartment complex we're going to buy.
Right.
Okay. Would they be able to buy the complex in the name of an LLC? Would they be able to put that in an LLC? Or
yes, they would, John. They might have to sign a personal guarantee, but not in all cases. And that's the benefit of the commercial side. Like I said, we put a lot less weight on personal credit as we do on the overall complex of the deal.
Now, do you think that's why when you see, I deal with a lot of investors, and a lot of times they have an LLC set up for every property?
Yes.
123 Main Street, 205 Walnut Street.
Yes.
Okay.
It's very common and very smart. Again, because I have a little accounting background, I don't want to get too deep today because we're talking commercial mortgages, but I would help somebody get with their accountant and an attorney to help make sure that's set up properly. Do you do a single-person LLC? Do you do a multi-person LLC? There's a lot of benefits. And if you look around at all the other businesses you deal with in your life, there's a lot of LLCs. Your dentist is sometimes an LLC. Your accountant, the bread shop, Billy's Bakery LLC. There's a lot of reasons people do that.
Well, I think our favorite home inspector, Mr. Staz, is on the line.
Awesome.
Hey, John, how are you doing there? Good morning, John.
Great, good morning.
Hey, it's not a beautiful day out there, is it?
No, what's happening here?
I don't know. It's rainy.
We went back a couple weeks.
We're behind schedule, guys. It's April showers still for May flowers.
Yeah, you're right.
It's unbelievable.
We ought to just reset the calendar. I mean, not really reset the calendar, but reset the seasons.
At least it's not January 97th.
Yeah, every year it happens, and every year we're wearing our jackets until the beginning of June, it seems like, lately.
Yeah.
Absolutely.
Crazy. I've got one of those, Nest thermostats. It doesn't know what to do, John. It doesn't. Betty says, "Is it trying to run the air conditioner? What's it trying to do now?" Because you see the little fan thing spinning on it. I said, "Betty, it's just confused."
He's reprogrammed for Pennsylvania weather.
Yeah, it's right. It's got to be able to switch back and forth between heat and air conditioning in the same day. So it's like what the heck's going on here? So I know today we're talking about commercial loans. I know you've been listening on the show. We're talking about Radon. John, can you talk to us a little bit, here in about how Radon applies in commercial buildings too?
Sure. We work a lot with commercial and institutional clients with our Radon mitigation division. So the main difference would be, with the average residential home, let's say a 2,000 square foot home, we can go in there and put in one system, and we know that usually one system is enough we can tweak it and get it to work and guarantee the whole house with one fan. With the commercial buildings and institutional, a lot of times you're talking about a building with a bigger footprint. So a lot of times, in commercial, they want to make best use of their space. So, you're talking about highly finished areas, offices, schools, whatnot. So there's less opportunity that we can run, piping through the basement or whatever. And so a lot of times we end up putting multiple systems. We end up, using different types of venting systems to match the cladding. A lot of times we have to, get high lifts or whatever. If it's a 60-foot tall building, so it's the same concept, the sub-slab mitigation of depressurizing the slab, but a lot of times we just take a slightly different strategy due to the size of the buildings and the approach we take there, different types of fans and different equipment that we install there.
John, can you sort of explain for our listeners that maybe haven't heard you talk about, radon systems in the past in the home, and explain to them how you actually mitigate or solve the radon issue?
Sure. So the most effective, it's widely known to be one of the most effective, or the most effective, is called sub-slab pressurization. So what it involves is going to the lowest slab area, usually the basement slab, and we cut a hole through the slab, and then we excavate material to create a void, which is, we do that to create a suction field. Then that gets hooked to piping, which runs either through the house or to outside. Then a fan goes to outside. Then the radon or the exhaust soil gas gets vented to above roof level.
So, and that's the same, it's the same theory, the same practice, even in a commercial building, like you said, but you may have to take it up 60 feet in order to vent it above roof level. Is that like a state regulation, a federal regulation, or how did that come about? Because I seem to remember back in the day when radon first became a hot issue here, for a while there, they were venting it right outside, right there next to your air conditioning unit.
Yeah. When I first got started in it, it was vented outside. Then in the early '90s, they made it a little more. They realized what was happening is people during the summer they'd open their windows, so they're vetting this radon at ground level, then it comes back in through the windows. So to avoid that from happening, they put in the regulations that it needs to be vented above the roof level.
And then, John, is there a system on there? So how do I know that my radon system's working?
Good question. That's what I was going to ask. If you buy in a house and it looks like it has it there, how do you know if it's functional? Do you still got to test for it?
Yeah. There's some confusion on that too. The only way to really know if your system is working, well, first of all, you want to verify that the fan is operating. If you have a system on a house, you want to see if it's working. So you go and usually there's what's called a manometer, and that's a pressure indicator. It shows the amount of vacuum that fan is pulling. So that it's a little U-tube. Some people call it a U-tube. It's either got red or blue liquid.
A U-tube? That sounds like a video, buddy.
Yeah. Not to be confused with a large video company, but yeah. So you look at your U-tube, your manometer, make sure that there's a pressure differential there. So you want it to be a J shape, not a U shape. The liquid in there, it shows that the fan is operating. You can also go, wherever your fan is, whether it be in the attic or outside, you hear that fan, just listen to it, make sure that the fan is running. And then once you verify that your fan is running, the only way to really know if it's effectively reducing your radon is to do a radon test. And you can get a home test at Home Depot or Lowe's, or you can call us. We'll send the kits out. We sell them as well. But
John, what's your thought on that? Let's just say that I'm buying an existing property, residential, commercial. It's already got a radon system in there. That YouTube gizmo's giving me the thumbs up sign. Shouldn't you still get a radon test? Because just because that little YouTube thing is showing that it's thumbs up, that doesn't mean that maybe the system was installed correctly or anything, correct? I mean, it would just seem logical to still test, right? I mean, right?
It's a pretty expensive test, isn't it, John? It's not real expensive.
Well, like in average pricing, most of the companies, including us, say around $150 to do a certified test where you have somebody come to your house and place a monitor or devices and then take them to a lab or provide you with a certified test result. Or for $20 or $30, you can get them at Home Depot's, Lowe's, or from us.
So a certified test, $150 when you're buying a couple $100,000 house or a couple $1 million commercial property certainly makes a lot of sense.
Yes, yeah, it's good to verify because we have, I frequently have people. In fact, just yesterday, come to me and say, when we bought the house, we had a test done and it tested okay, but now it's testing elevated. And one thing that people don't realize is that the results can vary based on time of year, and the biggest difference would be between heating and cooling season, summer and winter. So when you're running your heat, the levels tend to be a lot higher during the winter.
So the assumption, has been, I know I hear it from a lot of, real estate agents, they go through, they see the system there and they, yeah, it's already got a system, you don't need to test. My opinion is test just to be safe because it's just like a well. It may have been good 2 years ago, but, we don't know what's in the water today. Do you agree with that, John?
Yes, I do. I agree. And also, being that we're licensed through the regulatory agency of the Department of Environmental Protection, the DEP, they also recommend testing every couple of years. If you have a system, they recommend it be tested every couple of years, just to verify that the levels are where they should be.
Well, and I think the thing there is people don't realize how dangerous it is because it's something you can't see. I think people really need to educate themselves on the dangers of radon and how bad it is if it is present. So
right.
Testing every couple of years, spending $150. I mean, we spend that at the dentist.
Yeah,
every couple of years, right? So,
yeah, and $150 you can do it yourself for a lot less than that. For a real estate transaction, John, about this, the sellers or the buyers, they're going to want a certified test usually just to ensure that is done properly. So for the purposes of real estate, but if it's just in your own home, you can just do the self-test kit and save a little bit of money there.
Right. So if you're buying a house, maybe get it certified, but every couple of years you go to, one of the home improvement stores and grab a test for, like you said, $20-$25, and you at least can know whether it's good or not.
Yeah, and the other thing is, I hear this a lot, and this is my public service announcement. A lot of times people say, well, I have a walkout basement, or I don't have a basement, so I never thought I needed to test. We install a lot of systems for slab-on-grade construction, walkout basements. So that's a misnomer that, walkout basement, or I don't have a basement, I don't need to test. That's a fallacy that a lot of people believe. In the EPA and the DEP, they recommend that every house be tested.
John, since we're on the topic of commercial, real estate and loans and that today, what about, have you done testing like in an apartment complex? Because a lot of those, that I'm familiar with are, slab on grade.
Yeah, sure. We do them all the time. In fact, just speaking of that, we did testing on a large local apartment complex recently, and now we're putting in systems there. A lot of the units tested elevated, and we have a rather large project putting in systems there. So yeah, that's pretty common.
And I've got another question. The follow-up question is, what about if we were in like a 4-story commercial office building? Do you test every level, or you just start at the bottom and work your way up?
We start at the bottom. Usually the protocol for commercial and institutional would be you test the ground floor, but you test, being that you can have a lot larger of a footprint, you don't want to just test one area. So the protocol is, let's say a school would be one test in each classroom or office. So that way you're getting all the corners, it's pretty common you have, like, let's say one wing of a large building that tests elevated, the rest of it tests okay. So in order to pick that up, you want to test each office. Interestingly, or classroom, interestingly enough, one of the other parts or reasons for that protocol is like a personnel issue. You don't want to get this guy saying, oh, well, you tested his office, but you didn't test mine. So that's another purpose for that, or advantage of that protocol doing each office.
That's interesting.
John,
have you ever put a system in a school?
Oh yeah, we've done quite a bit of that. So schools, colleges. So yep, a lot of that work. We have a few, more than one going on now with schools, colleges.
So John, what's the best number for somebody to reach out to you? I do have your number up on our Facebook feed, but what's the best way for someone to get in contact with you?
Sure, the best number is 717-233-6144.
Now, you also do commercial building inspections. I know, because a lot of times people say, well, there's a home inspector, but I know your firm does a lot of commercial work, too.
Yes, we do. Yeah, all different types of buildings. We have a bunch of. We have a health insurance company that's rapidly growing and acquiring lots of commercial buildings that we inspect for them. So, all different types of buildings we can inspect or mitigate, if they have radon.
Well, fantastic, John. As usual, we appreciate you coming on the show this morning. Try and stay dry. And
hey, we will at the soccer game. Yeah, thanks for having me.
Kingsley will be talking with you then on the 26th. Next week we're going to run a best of show because I'm going to be drinking down in Fort Lauderdale.
Awesome.
All right, buddy.
The new office.
Yeah, you hit the nail on the head, man. You got it. We're doing that. All right, have a great day. Enjoy your weekend.
All right, you do the same. Thanks, guys.
You're welcome.
Take care.
All right, well, we're going to pay some bills here. And we'll be
The Real Estate Radio Guys with John Rainville and Kingsley Harmer. We'll be right back.
Searching for a home online morning, noon, and night, looking at website after website, clicking contact me, and nobody does? Missed homes that were sold before you knew they were for sale? The better choice is searchhomesinpa.com. Search if you want, or they'll do it for you. Contact by phone, email, or text to adjust your search or to tour a property. Start online. They'll call you back at searchhomesinpa.com or call toll-free 855-919-HOME, and they'll do it for you. Searchhomesinpa.com, 855-919-4663.
Buying a home? Your good credit could equal 0 down. Schedule for a free consultation today at kingsley.today and get started on the path to homeownership. NMLS number 1018. Good credit should equal better mortgage rates. Schedule for a free rate quote at kingsley.today and get your lower rate. NMLS number 1810.
Listen for the Real Estate Radio Guys with everything you need to know about buying and selling real estate. Saturday mornings from 8 till 9 on Oldies 102.9 WHYL. Buying or selling a home? For professional home inspection, call EnviroQuest of Harrisburg. Their certified home inspectors will conduct a thorough inspection and provide a detailed report with many pictures. They'll explain the findings. Do you have elevated radon levels in your house? Call EnviroQuest. They have fixed over 10,000 homes over the last 25 years. For a professional home inspection or radon mitigation, call EnviroQuest at 233-6144, 233-6144, or visit EnviroQuest online at evqharrisburg.com. That's evqharrisburg.com.
Back to the show, the Real Estate Radio Guys with John Rainville and Kingsley Harmer.
Well, good morning. We're back. We're talking about
searching for a home.
Commercial lending. We just got off with John Staz from EnviroQuest talking about Radon. We're talking with my guest co-host today,
Jason Hamilton with Edge Home Finance, appwithjason.com.
So, Jason, one of our Facebook people is asking commercial rates. So let's say right now that the residential rates are 5%. They're not going to get a 5% commercial mortgage.
No. And you're going to be 6.9, 7, 7.25, and even higher. You know, that private money's sometimes at 9%. But again, it's about the deal making sense. So if you're buying a 20-unit multifamily project, John, and your rate's 7%, and at the end of the day you got good positive cash flow, and the deal makes sense, it's kind of why not? You know, and you got to remember you are writing off that interest, and there's a lot more to it.
You know, buddy, you guys might want to rechange the way some of your thing lays out here, because when we do a post up here on Facebook, you know that little like icon?
Yeah.
Yours is ED.
Oh.
Or change your name to Ed.
Yeah, no problem.
It looks like Ed Home Finance.
I don't know where he's gone with that, but it stands for educated. We educate our clients and teach you what you need to know about commercial and residential mortgages.
I put Jason's information up. We'll have it up on the regular Facebook site, but it's also here in our feed right now if you're looking for something on the commercial arena. Jason also does residential mortgages, right?
Yes, sir. USDA, FHA, VA.
So is that like slumming it for you, or resident? Are you like me? Look, let me explain to you how my philosophy is. When I'm selling houses, okay, it doesn't matter to me whether someone's paying $15,000 or $1.5 million, because to that person it's a castle. It's their castle.
That's how we look at every loan, John. I was just going to tell you that whether it's a first-time home buyer that's out there trying to find a $100,000 house, which you know how tough that is today's market.
Do they exist anymore?
Well, I've just put a deal together yesterday, actually, so they do. But again, to that person, that's their castle. It's their $1 million home. So, yeah, we help all types, though. You know, we'll do a couple $1 million project. We'll do a $500,000 piece of land. We'll do a $100,000 purchase for a first-time home buyer getting seller help. It just doesn't matter. To us, we want you to feel like you're our only customer.
And so it's all about the service.
That's it.
It's all about the service. Yep. So even if somebody that's listening today is looking... Now, do you do refinances? What if I wanted to refinance my home?
We do. We haven't done a lot of those in the recent years, but it's getting more prevalent. You know, with rates going up, people are realizing that these adjustable rate second home loans that they have are also adjusting up. So a lot of them are calling me saying, hey, can we lock in a fixed rate, refinance our two loans into one? And, yeah, we do that all the time.
And let's say somebody got into a commercial loan and maybe they had to take a little bit of a higher interest rate loan, maybe say they're at 11%. Is that something that maybe they should reach out to you about to see if it might make sense that you might be able to get them refinanced?
Without a shadow of a doubt. You know, these larger project finance deals appreciate bigger too, John. So we could definitely get in a position to probably save them money. Their LTV may have changed.
So the only wrong question is to not ask you, not to pick up the phone or go online and ask you, say, hey, Jason, can I save any money here?
I will only do what's in their best interest. Like I said, we'll educate you 100%. If it doesn't make sense, I don't want to do the loan. But, if you're sitting there wondering, should I refinance? Is there a better rate for me? Is it time for me to start buying multi-units? I'm sure that you have an agent at your firm that will certainly go out and find them some properties if that's what they want to do.
Absolutely, absolutely. Well, folks, we just about run out of time, but if you're looking for a realtor or someone to represent you on the buy or sale side, whether it's a business, if it's commercial, if you're looking for a house, land, farm, estate, please reach out to me. Reach out to brokersrealty.com, and, we'd love to have an opportunity to earn your business the old-fashioned way. So my producer's telling me it's time to wrap up. So, Jason, real answers?
Real solutions.
Hey, that's a good one. Real people. Till next week, folks.
Thanks so much for listening to this episode of the Real Estate Radio Guys with John Rainville and Kingsley Harmer.
The greatest classic hits play on old